Happy Friday, everyone. I'm Sasha Bray. It is time to take a financial flashback through the week and all of the money topics that we covered in Watching Your Wallet. We'll start with a warning about a new scam that's gaining traction, which targets people who are looking for help with the immigration process. Also, we'll talk about how to manage the unexpected costs of having a baby before and after delivery, plus the conundrum that many homeowners are facing today amid higher costs. Do we renovate or do we relocate? And finally, some words of wisdom for families who are adding a teen driver to their insurance plans and what to consider before you decide whether to take out a home equity line of credit. Here's Watching Your Wallet Weekly. Law enforcement is sending out a warning about scammers who target people looking for assistance with immigration issues. Tonight, you're going to hear from one police chief who is investigating a case in his area as he shares what you should know to help protect your money and your personal information.
It's a shame that this working mother of two who was trying to do the right thing to become legal in this country is now scammed out of close to $7,000, her identity, and God knows what else.
Keith Conley is the police chief in Kenner, Louisiana. He says a woman came in after responding to a Facebook ad by someone claiming to offer immigration-related legal help.
And for the last year, he's been taking her money, giving promises of citizenship, work visas, social security numbers, not just for her, but for her two children as well.
Conley says investigators believe the deception went even further.
At one point, she was introduced by a Zoom call to a gentleman who was dressed up like a Border Patrol officer with the outer carrier, had a banner behind him that displayed the office's likeness and logo and things of that nature to give her the impression she was actually talking to a U.S. Border Patrol agent who made promises, again, assertions for money, but also captured her biometrics that he said he needed for the process.
Investigators identified a suspect in Florida, arrested him, and brought him back to Louisiana to face lots of charges, including bank fraud and theft. The Federal Trade Commission says only attorneys and people accredited by the U.S. Department of Justice who work for recognized organizations can give immigration legal advice. The FTC also warns people not to sign blank immigration forms or forms that have false information. You can also check your state bar to see whether someone is licensed to practice law. And be cautious if someone asks for payment over social media or gift cards, wire transfers, or through payment apps.
No government agency takes money over the internet. No government agency is going to ask for gift cards. No government agency or banking industry branch, banking branch, loaning institution, nobody's going to conduct business in that manner. So that's a red flag.
You can report immigration scams to local law enforcement, your state consumer protection office, and the Federal Trade Commission. And rest assured, the government says reporting these kinds of scams will not affect your immigration application or petition. Welcoming a new little one, of course, comes with joy, but it also comes with a long list of bills before and after delivery.
The estimated out-of-pocket costs for most moms are $2,700 if you have insurance. If you don't have insurance, those costs go to an eye-popping $19,000, and those are just average costs.
This is Erin McKay, Managing Director of Health Justice at the National Partnership for Women and Families.
Nothing in the healthcare system is simple, but the two main reasons that I keep coming back to with regard to the high costs of childbirth are because we are paying for care that does not improve care for moms and babies, and a scarcity of reproductive and maternal health care drives up costs.
She says the costs can also keep climbing after the baby arrives when parents need follow-up care and support.
So maybe you need to see a physical therapist to improve function or reduce pain, or maybe a mom is struggling with postpartum depression and is seeing a therapist or getting medication.
From a policy standpoint, McKay says one way to help could be investing in additional maternity care options like midwives and doulas as part of a broader care team. And for families planning ahead, she says ask questions early, confirm what your plan covers, make sure your providers are in network, and request estimates so there are fewer surprises later. McKay also says bills can sometimes include mistakes, so you want to check your statements carefully after the baby is born. And if you can't get clear answers from the billing office, ask whether the hospital has a medical social worker or an ombudsman who can help you review those charges and your options. The National Association of Home Builders says American households are relocating at the lowest rate ever recorded. So they're basically making the best of what they have. And maybe the home that you already have is the one that you absolutely love and want.
With the housing crisis that we're in a situation where it's not always realistic to move, to buy a new home, home additions are a really effective way of getting the space that you're looking for while staying put.
John Grishpool is the co-founder and co-CEO of Great Builds. It's a free service that connects homeowners with vetted general contractors. With housing costs so high and in such short supply, Grishpool points out that national data shows renovation spending is also reaching record highs.
When it comes to any large-scale remodeling project, there's always the fear, there's always the concern of scope creep, of the project costing twice as much, of hiring a bad contractor who ends up taking your money and disappearing.
Grishpool stresses the first brick you lay in this project should be finding the right renovation contractor. It may take some time and vetting, but it will always be worth it.
I always recommend getting at least 3 to 5 bids and spend a lot of time reviewing and screening the contractor that you're considering.
So what is it that you're looking for? How can you get it? And how much will it cost?
The price ranges for a home addition will depend on where you're located and what exactly you're looking to add. An addition can cost anywhere from $100 to $300 per square foot on average.
Some states are higher. New York and California far exceed that price, but if your home is already in one of those states, you probably know that.
Start with your goals and then identify what a realistic, reasonable budget that you have that you're willing to commit to the project.
Grishpool emphasizes never pay more than a small deposit. Pressure to do more than that is a red flag. And never make any contractor payments ahead of the agreed upon time. And don't be afraid to walk away.
Never hire a contractor after your first meeting. Always make sure that you speak with references, verify their license, ensure that they're bonded and insured. Make sure you do your due diligence and ensure that you're working with a qualified, reliable team.
One renovation rule of thumb is that you should never spend more than 30% of your home's current market value. So you can calculate that by multiplying your home's value by 0.3. You don't want your home to be worth more than you can sell it for. Also, budget for surprises, because that way when they come, you'll be ready. It's a rite of passage. You turn 16, you learn how to drive, right? But forget about buying a new vehicle. The average rate for full coverage insurance for a 16-year-old on their parents' policy is $5,740 a year. That is nearly $700 more than the same time period in 2023. Shannon Martin with Bankrate says that means that moms and dads have to find almost $270 extra per month so that their teen can drive one of the vehicles that are already on the policy.
So it used to be that, of course, you get a license when you're 16, but maybe we should stop and think about it and have those financial conversations with our children when they're 13. What does it mean to have a car? How can we help pay for a car? What if you get a ticket? If you put that in their mind at a young age, as it gets closer, those conversations of maybe you don't get your own car, maybe you have to wait for you to get your license, those become easier because they're aware of the finances around the responsibility of driving.
Martin says insurance companies also use driving behavior to help set rates. As an adult, they have a lot to pull from, but a teen is a blank slate.
They don't have any data to understand what kind of driver your teenager will be. So they have to look at crash test data that's broken up over age categories that groups teens into categories with other teens. And that data shows that teenagers are more likely to have accidents, and the accidents that they have are going to be more severe, which is why they cost so much to be added to a policy.
Martin says a new teen driver actually costs about $450 more per year than an average adult driver who has a DUI on their record. So she says shopping around for a new insurance policy can help you cut costs when you're adding that new young driver. The average rate for a $30,000 home equity line of credit is just over 7%. That may still feel high, but compared to other options for borrowing, it may be more affordable, especially if you're sitting on a ton of equity and you don't want to move.
You have a lot of homeowners sitting on those pandemic era mortgage rates. So they say, you know what, maybe I'll stay in place and I'll renovate my home or maybe do debt consolidation. And that's what we see a lot of homeowners doing in terms of gravitating to HELOCs.
Bankrate's Linda Bell says the average rate is at a 3-year low right now.
When you compare it to other forms of financing, which people are considering, like credit cards, which could be 20% on average or more, or personal loans, which should be about 12% on average or more, they're certainly more affordable.
And often this form of financing is flexible, which allows you to borrow as you need the money up to your loan limit.
Typically, it's a 10-year draw period and a 20-year repayment period.
But there are risks. The rate is typically adjustable, so it could get more expensive over the term. And you have to make sure that you can absorb that extra monthly cost.
And you also have to consider that when you take out a HELOC, your home is on the line, right? So if you don't pay it back, you could potentially lose your home.
So run the numbers and compare offers from several lenders. Consider the interest rate, the length of that loan, any upfront costs, annual fees, or other fees. The other way that you can tap into the equity in your home is with a home equity loan. Those are typically fixed interest rates, and right now the average is sitting around 7.85%. We thank you for joining us today for Watching Your Wallet Weekly. We will see you throughout the week with more helpful money tips, and here streaming next Friday with another recap. I'm Sasha Bray. Have a great weekend.